Hi everyone, I'm Kristin Myers, editor-in-chief of ETF.com, here with a very important economic question. Could tariffs lead to stagflation? Well, first, what is stagflation anyway? Stagflation is a very tricky economic scenario whereby inflation rises, but the economy also weakens. So we have higher levels of unemployment and we also have slowing economic growth. Here's why it's so tricky. The mechanisms that the Federal Reserve uses to essentially lower inflation, unfortunately, also raise unemployment and slow economic growth. And the mechanism that the Federal Reserve does to essentially stimulate economic growth also stimulates higher levels of inflation. So it is a very unfortunate reality if we are in stagflation that the Federal Reserve will have to contend with, because they're going to have to figure out what are they going to do? How can they both lower inflation but also stimulate the US economy? So back to the original question, could tariffs lead to stagflation? A lot of economists do think so. Unfortunately, tariffs are an inflationary measure, and because they essentially slow down how much consumers are going to want to buy because of rising prices, how much manufacturers can export, and even how much importers can bring into the country, how many goods that they can bring into the country to sell to you and I, there is a very real likelihood that tariffs could lead to this stagflation scenario. So what the hell are you going to do if we are in a period of stagflation? Well, don't worry. You're following us at ETF.com, and we've got several ETFs that can help you combat that area of stagflation. So first and foremost, you're going to want to look to a defensive sector. Those are sectors that are not particularly sexy, but that people are always going to need. So you're going to think consumer staples, utilities, and even healthcare. If you want some ticker names, that's XLV, XLU, and XLP. You're also going to want to look to commodities, things like gold. That's going to be GLD, or even silver, that's SLV. When there's times of high inflation, commodity ETFs tend to perform very well. And then last up, you want to look at short-term treasury bond ETFs. I'm talking 0 to 3 months. It's a short period of time that people lock up their cash, and those short-term treasury bonds tend to outperform the broader market. So something like SGOV, which is a 0 to 3 month treasury bond ETF, is also something that you want to look at. But of course, be sure to like, follow, and subscribe to ETF.com. We will keep you updated on everything around tariffs, around stagflation, and how you can navigate that market, the economy, and of course, your investor portfolio.